Hi there, welcome to Kneppy Invest. Now, as I listen to the rain fall outside, and since I'm in between two night shifts and operating on only 4 hours sleep, forgive me if I make any silly errors doing this video. But I thought I really had to do this video, an update 17 to the performance and particularly the makeup of this portfolio, because it was without doubt the busiest week I've had thus far since I started this portfolio way back in August 2020, 4 acquisitions and 2 disposals during the week. So let's get stuck into it. But first, I'll just talk about what this portfolio is all about. So my investing strategy has evolved over the last, 12, 13 years or so. When I first started investing, I was all about finding those companies that I thought were good value and then buying them and just, sort of a buy and hold strategy. But the one negative thing about that sort of strategy is you can be holding a company that you believe in that could be down 60% or so with the share price, and you're just holding on and hoping. So I really want to get rid of that emotional side and just be hoping that the share price goes up. And this was the strategy that has evolved over time to fix that problem. So what I'm looking out for is some sort of breakout in the share price or a shift in momentum or sentiment. And particularly with breakouts, I'm looking for positive announcements. And the most positive announcements you can find are profit earnings upgrades. And on the flip side, when I'm looking to sell, it's just a shift in momentum and sentiment or a negative announcement. Before I get into the acquisitions and disposals of the week, just to overall look at the market and focusing on the XJO. And we've been trading in this channel for about 4 months or so since November 2020. And right now we're right at the bottom of that channel. And I've mentioned that a couple of times in the last 3 or 4 videos. And you can just see the top of that channel is around 7,000. And a very, very bullish move from the market would be moving towards that top of the channel. So that would be almost a 300 gain. And that could happen in a few days, a few weeks, who knows. But the bear would say if we fall below the current levels, that would be very bearish. Because that would mean this channel is complete over and we have begun maybe a bearish move or a bit of a correction in the overall market. So I won't guess which way we're going to go. I'm not forecasting the future, unlike my real job. I'll leave that up to the market to decide which way to go. Now to the 4 acquisitions I made during the week, and the last one I made, PushPay, towards the end of trading on Friday, was sort of impulsive buy, sort of a gut feel buy. So that was PushPay at around $9.69 or something. The first buy during the week was Kneppy. That was because after their results were released, the market has really gotten to like that company, and we can see a really bullish move over the past few weeks. Blackmores was also post results, and looks like the market has liked those, and we are starting to see a potential uptrend developing there. And Northern Star was complete opposite. That was a pick the bottom sort of buy, and the pick the bottom was around $9.50. And if $9.50 holds, I'll just keep on holding it. And if $9.50 breaks, that would be a sell. And the 2 disposals I made during the week are BlueScope and Michael Hill. Now, the whole point of doing this strategy is to keep your emotions out of it, any decision making. And BlueScope was a slightly emotional sell because that was the first company I bought in this portfolio. But it's been a great wealth creator for me, up over 55% or something like that. And for a company like BlueScope to get gains of 55% is phenomenal. And Michael J also outperformed the market since I've held it. But I can see some down movements in the retail. There were some negative retail numbers out during the week. I was actually trying to find them. I couldn't find them at all, but they were some negative numbers. And it does look like retail at the moment is under a bit of pressure, and Michael Hill was sold out because of that very reason. I am still holding Dusk, and I'll continue to hold Dusk, as that is now my best performer. So overall, for the week with dividends, my portfolio was down 0.8%, so roughly in line with the market. Now, this is what I discovered in ShareSite, that you can look at the individual stocks and compare their performance from when you bought it to the benchmark. So these are the best performers in my portfolio. I've already mentioned Dusk. That's up total returns of 56.28%. You can see their dividends 10.8%. So the dividend yield for Dusk is fairly large. That's a really good dividend yield. So that's another reason I've decided just to keep a hold on that, because this company is growing and there is a potential for this company to maintain that growth moving forward over the next few years. And we could even see that dividend yield go up in time. So overall, that performance 56.2 compared to the benchmark, which was only up 2.7. Stone Horse and Hammer Metals both up around 30% or so, significantly higher than the benchmark. And SG Fleet and Pack Group, one of my recent buys, both of those companies around 23 to 17%, and the benchmark has been, you can see for Pack Group, the benchmark since I bought that actually has gone backwards by 1.2%. So the whole point of this portfolio is trying to beat the overall market, and I'm doing that quite successfully, particularly with these companies. Now, on the flip side, the worst performing company in the portfolio is Aeris Resources. Now, that's down 20% since I transferred them from my other portfolio to this portfolio. Now, I originally bought them at 5.6 cents, and right now they're sitting on 10 cents, and the market is wanting to test 10 cents because that level is very powerful resistance and support. So hopefully it stays above that level. A lot of buys at 10 cents. So hopefully not a lot of sellers come in. I don't know why you'd sell at 10 cents because that's just me. Anyway, I'm going to maintain a holding. It's still in an uptrend, still good sentiment around this company. I think a lot of people selling now are just taking profits because it's been on a good tear over the last 6 months or so. And I do believe there is potential that the share price of this company and valuation of the company can be significantly higher in, say, 2 or 3 years. And there's no reason for me to sell it out right now. Now to the acquisitions, Kneppy, and the half-year results were, or the response from the market was quite muted. I've already done a video on this, and it was really strange because the day that they released their half-yearly results, the share price actually went down, but we didn't see a response from the market until the next day and then subsequent days. So the share price actually went down below 20 cents on the day they released the half-year results. And when I did actually look at these results, because I am following this company quite closely, because I do think they have a very promising future. I was fairly confused by the market reaction, and this is another reason why sometimes the market can react quite a bit different than you, and sometimes you're right and the market is wrong, because in subsequent days the share price went from below 20 cents all the way up to 25 cents in 4 trading days. That's a 25% gain in a week or so. And ever since then, the share price has been going up and it's now at 28.29 cents. So a really well-defined uptrend developing here. The only problem I have would be that the uptrend is accelerating at a much quicker rate than I would like. But you can see an increase in volume over the last month or so with the release of their half yearly. So at the moment, very bullish with this company, and the market is thinking the same. Now to Northern Star, this is just the weekly chart going back to middle of 2019, and the whole reason I bought this company was the share price got to around $9, tested $9, and has pulled away from that on really good volume. You can see the volume in the last trading week was its highest level in this time period, and when I look back through its history, it's the highest volume traded. So a lot of people coming in to buy, and that's actually a good sign. Again, you'd say Northern Star's share price is highly reliant on the movement of gold prices, and there is potential we might be seeing a bottom with the gold price as well. So all things going well here. This was the bottom, and I bought in at $9.50, and I'd love to see this test $17 in the next few months. On to Blackmores, and I've used a couple of things to signal a buy for this company. So they released their half-year results, and good reaction from the market. That's the first thing. Fairly positive half-yearly results. That's the second thing. So those are very two important things I do look for. The share price went through resistance at about $83 or so on good volume. So always looking at how good the volume is when it's going upwards. And every single time the share price has been going backwards, it's been on lower volume. And that's another powerful and bullish signal. So I decided to buy into Blackmores when it went through that resistance line, which is now support at around $83 or so. It's now testing that support level on last trading day on Friday. The other thing is this shows you a higher low pattern, and the high highs are these ones. So 2 successive higher highs, and you've also got 1 successive higher low. So this is the very sort of pattern you want to buy into. I've been testing this pattern over the last few months or so, and every single time I see this, it's been successful. So I think this is definitely a pattern that I might be trading way more in the future. And I use the high-low pattern with push pay, and I'll just show you right now. So that's the support level at about $1.40. That was the first trigger to potentially buy into this company because it tested that support and bounced off it quite well on good volume the next day. And then that was the next low. You can see that low is higher than that low. This was reached at the support level. So that's the first higher low. Then we got a high in between those two lows. We got a high at $1.70, and that high actually became a resistance level. And then that's the next high, which is higher than that $1.70. So we've had now 1 successive higher high and 1 successive higher low. So I've just used this pattern to buy into push pay. The only thing is when it pushed through the most recent high or into the most recent high, there wasn't a lot of volume, and that's pushed through that resistance level. I would have rather seen much higher volume, but I've just put in there the new uptrend, which with that brown line. So if it falls through that uptrend, that would be an immediate sell. So you could have actually drawn that uptrend with Blackmores as well. So that's what you get when you get this high-low pattern. You can actually draw in an uptrend line with that. Now to the disposals for the week, and Michael Hill had 3 really positive trading updates towards the end of last year into the start of this year. And the most recent trading update in the middle of January was very muted the response from the market was very muted. In fact, the share price hasn't got higher than that. So I think the market was already factoring all these positive trading updates into the share price of Michael Hill and many other retailers. And I think at this point in time, I think the retail trade is now coming to a completion. I can definitely see retail numbers falling through the next few months. I've already got signs in the last few weeks or so. I did see some negative retailing numbers. So I think the potential uptrend in retail has come to a completion. And that's another reason I've decided to sell out of Michael Hill. Good gain for me from when I bought. And I think there's never any problem taking some profits when the sort of reason you bought into that company has come to an end. And BlueScope Steel. So this company, a little bit of a sad that I bought or sold this company. So I bought this BlueScope around $12 in August. Again, they had a couple of, they've actually had 3 trading updates or profit upgrades. And there was a profit upgrade in November. Share price got to $18, and the share price has done very little since then. Even with the second profit upgrade, with their results, the market didn't do much. Share price got to $19, and when it got to about $19.15, I decided to sell because the share price, I think, might retreat a little bit. However, steel prices still going up, and that's the reason BlueScope is right now, the share price is going up and is almost at something like 20, maybe not 20-year highs, it's something like 15-year highs with their share price. And because the gains I've had with BlueScope are at 55%, I decided to lock in those profits and buy another company with a little bit more upside to it. And when I compare the gains of these companies, BlueScope and Michael Hill, to what the benchmark did, I can see these buys were very successful. So BlueScope, 56% gains from when I bought. So that includes the capital gain and the dividend compared to the benchmark, which was 12.5%. And when you can outperform the benchmark with a company like BlueScope, so it's not really a growth company or anything like that. So I've held BlueScope for about 6 months. And when you get that sort of returns in 6 months with a company like BlueScope, that's the sort of strategy you really want to cling on to. And with Michael Hill as well, gains for that company 27%, and the benchmark over that same period was 5%. So in my opinion right now, this really verifies the strategy I've implemented. So that's all I've got for update number 17 to Kneppy's portfolio. I hope you've enjoyed this video. If you have any comments about this particular strategy or anything else I do, make sure you leave a comment. I'll eventually answer them. Since I'm getting more subscribers, I'm getting more comments, and that means more time, and I try to answer every single comment. So I think some comments I haven't answered that have been there since over a month ago, so I've got to get a little bit busy. Now, I'm not a financial advisor, so even though I have this sort of strategy, it doesn't mean you should follow this strategy exactly as I do it. Everyone should find their own light, find their own strategy that suits their own investing style, their personality, that sort of thing. And so if you do need a financial advisor, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.